Hi, folks. Welcome back to On Call with Insignia, where you go on call with leaders innovating the future of Southeast Asia, internet and digital economy, and beyond, or as we like to call it, Asia Innovation. I'm your host, Paolo Aquino, and we are back with another episode with alumni from Insignia Ventures Academy. Right now, Insignia Ventures Academy has been running for the last 4 years. We've had 9 cohorts and have seen many alumni come through the program and really make a name for themselves, whether as angel investors, VC fund managers, or even founders. And we're here with one of these fund managers that started right after they joined IVA. Previously, they were working at Mistubishi and also with their own kind of family office foundation. So I'm really happy to have here with me alumni of the Certificate of Venture Capital program, Rei Murakami, currently founding partner at Kadan Capital, VC firm based out of Singapore that invests heavily in fintech and AI, especially the early stage. And I've had the pleasure of catching up with Ray recently and learning more about what they're focusing on, some of the companies they met. And I'm really happy to finally share that with you guys here in the channel as well. Ray, anything to add to your introduction, and welcome on the show.
Yeah, thank you, Paolo. I think you've covered pretty well my introduction. Thanks.
All right. Yeah, we would love to dig a little bit deeper into how we first encountered you through the IVA program. How did you find out about the program, and what made you decide to join?
So I joined in 2022, and that was when I started researching into the whole VC ecosystem in Southeast Asia as I was planning to launch my VC back then. I noticed there were a lot of programs for founders, but not so much for aspiring VC investors. I think IVA was the only structured and really regionally focused VC training platform. So that kind of was an easy choice for me to join the program to get a foundation of VC knowledge and really understand the landscape in Southeast Asia.
Why were you looking into VC at that point in your career? Was it just one of many interests that you were trying to explore, or was it always a plan for you to actually get into investing?
Yeah, so I was planning to get into investing, and particularly I was quite excited about tech space. So a little bit more about our background. I come from a Japanese family office. We started as a fund in Japan doing public equity investing. And we had this strategy called activist investments. It's to invest in public companies that has a lot of cash, and we would take a pretty majority control to improve their corporate governance. So it's a very different strategy. It's a value investing. But at the same time, I think what really lacked as a family office was to back what drives the economic growth. And I think that was how I got interested. And because I'm also based in Singapore and I saw the emergence of the tech companies here in Southeast Asia, I started to research into the VC ecosystem around that time.
So you were already based in Singapore at the time when you were looking up IVA. And yeah, so you went through the program. That was 2022. It's been 3 years, so I'm not sure how much you remember. So I guess this is this should be a really interesting question. So what for you was the most memorable and rewarding part of the program, looking back now, 3 years on? Yeah.
I think I felt the program was very well structured. I think a lot of the materials that were shared, a lot of the information that, Insignia as a VC fund has that they shared with the participants was really very well structured and a good introduction to venture capital in this region. So yeah, I think the biggest part was really to get the overview of the ecosystem here in Southeast Asia. The other thing, something that was different for me was everything was online because it was during COVID. But even I think the diverse background of the participants that I talked to, mostly online and then met in person a bit, but I think that diverse background was quite interesting. So there were those who were already in finance, either it's a different asset class or they're in investment banking. Some people were from finance backgrounds, but at the same time, some people were ex-founders or current founder backgrounds. So that sort of mixture is something that you see in VC, even when you start working in a VC. So that kind of mirrored what would be like in VC, and having that diverse backgrounds and diverse opinions to form a view on investment. It was like a trial of being in VC.
I think that's definitely one of the things that attracts a lot of people is really the whole experiential aspect of it. And you mentioned also the network. Do you happen to still keep in touch with anyone from your same cohort, especially those in Singapore?
Yeah, I do. So I sometimes get a referral for a company that we could look at. So that's been a great network.
And what part of the program, I mean, you mentioned a couple of things, but what in particular would you recommend to other professionals like yourself at that time who are maybe looking into VC, Southeast Asia as a region?
I think the best part again is really getting that overview of the what's happening in Southeast Asia. And the other thing I think would be to actually have a outbound reach to different founders in Southeast Asia and having actual calls, so doing a due diligence. So it's very similar to what you would do as a VC investor, and then you would really understand, is that really my thing, or is that what I'm good at? And also having that conversation would really sharpen your thoughts on how you think about investment. So those are, I think that was a great experience.
Yeah, and even if you already had an investment background and a finance background yourself, I think venture capital is also its own kind of animal to tackle, and especially venture capital in Southeast Asia. And going back to your main objective, really joining the program, which was to really invest yourself into startups. How did the 12 weeks eventually lead to you starting your own firm, right? Venture capital firm, Kadan Capital, yeah.
Yeah, so I always knew I wanted to start a VC in Southeast Asia. So that was always my plan. But I think something that I got a better view is that, so I joined in 2022, and when I was, thinking about looking back at that time, and I was particularly looking at the e-commerce sector when I was in the program. So we started looking into quick commerce because that was a big thing back then. And I think in US and Europe, quick commerce got a lot of funding, and of course, seeing quite a few successful cases back then before they crashed. So back then it was a very successful investment theme. So we started looking into that thesis in Southeast Asia and quickly realized that first thing is that you can't just copy paste the business model from US or Europe. Obviously, you have to really localize. So that piece was very clear during looking at these theses. And the other thing is, so the quick commerce didn't work in Southeast Asia, but not just in Southeast Asia, globally. Even so that the thesis got a lot of funding, and VC can be very like momentum driven investments, and you have to have a really strict discipline in what you invest in the KPIs that you look at. So those are some of the learnings that kind of taught me to have a bit more thoughts in before starting Kadan.
I think that one of the interesting things people learn through the program is what not to do as opposed to what to do.
Yeah.
Yeah. So I guess that kind of finding that negative space was, I guess, an interesting learning point. And I guess because of that experience, was that, I guess that's partly your reason why you decided to focus not on e-commerce, but on fintech and AI. What are the other reasons why you decided to have Kadan's focus on those particular sectors?
So yeah, so a bit of background again, our fund only aims to invest in 20 to 25 companies in the next 2 to 3 years. I would say quite small fund in this region. So that led us to think that we would want to be strong in specific sectors rather than doing sector agnostic investments. And again, because of that kind of a bit of a momentum driven investment that happens in VC ecosystem, we wanted to focus in specific sector and specific investment thesis and have a deeper knowledge and have thesis driven investment rather than chasing what is trendy or what is getting funding in other regions. So those were the reasons why I first thought about focusing on specific sectors. And fintech is obviously, it's still the most robust sector in Southeast Asia. When you look at the different sectors, fintech still has the biggest number of unicorns. And we do also see a lot of fundamental opportunities in Southeast Asia. So that was the reason why we focused on fintech. And AI, I would say AI is still it's quite difficult to find good AI companies in Southeast Asia. It's undeniable how AI is going to change how we live in the business models here. So we're looking at application layer of AI that are building a product or building an operational system based on AI that could be a huge advantage for startups to grow faster and have better margins. So that's still our thesis here.
Yeah, so maybe not necessarily AI core, AI native startups that are perhaps using AI, augmenting AI into their business model to become more profitable, cash flow efficient, and all that. I wanted to ask, one of the things that we tell people who join IVA, especially that program, is you really have to build a brand for yourself as an investor, an identity, so that founders know what value they can get from partnering with you. And so, like, how would you describe yourself as an investor? I guess both within the construct of Kadan and also individually as Rei, right? Like, how do you uniquely engage with founders?
Oh yeah, that's an interesting question. I think I think based on the feedback we get from the founders that we invested in, I think one of the things is we tend to build much closer relationships with the founders. So the founders don't only share the wins of the businesses, but they also share day-to-day challenges. So we really focus on having that close relationship and building trust. And I think when you look at VCs in Southeast Asia, I don't want to say everybody's like older than us, but I think we're one of the still very young funds that are started by young partners. So that actually helps a lot with being very close to founders. So that's something that I get as a feedback. The other thing, myself as a person, I like to avoid too generic advices and waste their time. So I want to really focus on targeted and giving advice where I know that I can provide value. So that is usually related to my network with Japanese investors or advice on how to enter Japanese market or these things that I do feel like no other investors couldn't provide, but this could be a very unique value add for myself. Yeah, I'm kind of an investor that is very targeted in what value I provide.
Speaking of, I guess, value add in terms of helping companies move to expand to Japan and the like, are you seeing a lot more demand in that direction these days? More so than when you joined IVA, for example? Like
Yeah.
how do you see like the cross-border kind of opportunities between Japan and Southeast Asia evolving today?
So I think when I joined IVA, that was 2022, and that was the peak year or peak time of Southeast Asia. You see, everybody was very optimistic.
The top of the cycle, yeah.
Yeah, and fast forward to now, I think one of the biggest issues is really the exit market in Southeast Asia that people have really identified. And that really gave opportunity for Japanese investors to come in. So a lot of Japanese corporates are coming in, especially the financial institutions are coming in to provide later stage funding, both in terms of equity and debt. And Japanese corporates, they tend to focus on long-term partnership and synergy rather than just focusing on the capital gain. So that has helped a lot of startups here to have a partnership. So I definitely see a lot of interest from Japan and very good match with the startups here. The other thing that has changed over time is also because of that issue with the exit landscape here, Tokyo Stock Exchange has really focused on presenting the exit market, the IPO pathway from Southeast Asia to Japan. There are a lot of discussions happening there. So there's a lot of interest from Japan that could be very helpful for this ecosystem.
Yeah, no, I definitely agree. We've had Ben from Tokyo Stock Exchange on our show as well a few
Yeah.
episodes ago, and
Okay, nice. Yeah.
yeah. So he definitely echoed a similar sentiment, and also I guess a lot more interest from the exchange, the local exchange, to actually engage with international companies. Does Kadan also see any opportunities in the other direction of partnering with Japanese founders who are interested in Southeast Asia, or is that already too beyond kind of the scope that you've been looking at recently? Yeah.
Yeah, definitely. So our focus is not only Southeast Asia. Our main focus is
Mm,
Southeast Asia. We're looking at different parts of Asia that includes Japan. We've been looking at quite a few startups in Japan as well. Have not invested in any, but I know that a lot of startups in Japan are looking for Southeast Asia expansion. Although I do think if you're talking about developing countries in Southeast Asia, their product might not match so well. They would need to really localize their product, and also the way they do marketing or go to market, they have to really localize. So it's been quite a challenge, but there's a lot of interest from Japan to Southeast Asia as well. But personally, what I think would work better is for Southeast Asian founders to go into Japan, and Intellect, Insignia's portfolio also successfully entered into Japan. But some of the companies that are building global product out of Singapore, they would build in Singapore and go into the different developed countries, but it's not so many markets in Southeast Asia. I think Japan would naturally come as a next market for these companies to expand into. But that said, there's a lot of nuances in how you do businesses in Japan. The founders really need to recognize that differences and make sure that you localize when you go
yeah.
into the market.
We could definitely write an entire book about how to get into Japan, but maybe you can share with our audience maybe what is the most common nuance that founders tend to overlook when it comes to expanding to Japan.
I think maybe I'll just mention two, and this is specifically in B2B products. I think one is that closing deals with businesses takes much longer time, and it's not that simple as having online calls. It's a lot about building trust, meeting in person. A lot of the businesses are done still in a traditional way. You might think this might not make sense for startups, but if you are closing a big deal, it could make sense. But you really have to think that these things that seem inefficient should be done for you to win bigger deals. And the upside is that because Japan is very much based on trust, once you win that trust, the stickiness is higher. So that's one thing. I think the other thing is hiring. I think hiring is very tough in Japan as a non-Japanese person entering into Japan market. Yeah, you would need to find someone who can both localize in Japan market, but speak English to communicate with your headquarter. But there's a lot of differences in culture. So you really finding that kind of country manager that can really navigate that is one of the challenges.
I definitely agree, especially with the closing the deals and finding the partners. Insignia has had to arrange a couple of Japan tours for our
Yeah.
founders to actually go around and meet all these potential customers in person. And I guess the bigger the deal, the more dinners and meals you have to go out
Yeah.
to actually close it. But yeah, I think the benefit of that is that once they become a partner, they'll stick with you like through thick and thin. So there is that pro to going through all this process. And as they say with startups, sometimes you do things that don't scale to scale. So
Exactly, yeah.
I guess there is that wisdom there. And you did mention earlier about exit pathways as
Mhm.
part of this whole Japan, Southeast Asia kind of corridor. How huge is that opportunity within Kadan's view of exits? Like, how does your fund view exits, especially as an early stage fund? And what are the other pathways that you've been looking at?
Yeah, for sure. So I think as a young fund, because we didn't invest before 2024, we still have quite a long time until the exit. So 5 to 10 years we can wait. I think by then, I think the exit market will improve a lot. Everybody says this is the biggest issue. The governments recognize it. In fact, yesterday, SGX just announced that they're going to partner with NASDAQ to do dual listing. So there's been a lot of initiatives in Malaysia, Singapore, Indonesia to really improve this. So we are quite optimistic when it comes to our portfolio companies exiting in 5 to 10 years. But I think currently still there's a lot of challenges. There's not big enough and deep enough IPO market. There's not so much acquisitions happening. Although I think some of the Chinese companies, Japanese companies, different markets would be interested in coming into this market, but there's a gap in the price that VCs or the startups want to sell versus the buyers are looking at. And that kind of difference has to come closer now that we've realized that the expectation of Southeast Asia is not as high as what we thought in 2022. So that's definitely a challenge. And I think because of that lack of deep IPO market, I think a lot of the VCs with funds that are ending soon would need to find either secondaries or M&A, different ways of fundraising.
I think that's definitely something we're also seeing on the Insignia side. And I was wondering like how your view is in terms of trying to reconcile the valuation gap, right? Is it more of just founders biting the bullet, or would you advise them to maybe expand the real growth in order to match the valuation, right? And be able to maybe sell from a better position, right?
Right. If you had the choice to just be persistent and wait for the next raise and just grow until then, I think that could be a good option. If you're running out of option, I think you would have to really have a difficult conversation with your investors and consider down rounds. So yeah, I think that's something that needs to happen a little bit more, I would say. I think a lot of the funds in Southeast Asia still have a lot of dry powder, so they're doing a lot of internal rounds before they go out to the market. But I think it's starting to an extent where the founders have to consider down rounds.
I wanted to shift gears as we round out this interview, and maybe you could share a little bit of, now that you've run Kadan, I guess a little bit more than a year now, what are some things that you didn't expect to end up doing as a venture capitalist, especially in terms of, I guess, daily routine or workflow kind of perspective compared to when you were doing activist investing out of Japan?
Yeah,
What
for
was the biggest
sure.
difference? Yeah.
Coming from public equity investing, I always thought investment is just really focusing on due diligence and doing investments. I think for VC, starting VC, it's not just investing, it's really about building a company as well. So you have to build your own team, you have to build your own brand. There's a lot of effort that you put in for operations and marketing. We're starting to have more exposures into LinkedIn presence. We also launched a podcast, by the
Yeah.
way, if the viewers are
Yeah.
interested. Can I?
You also interviewed Intellect as well, Theo. I
Yeah,
saw that
exactly.
episode. Yeah, yeah,
Yeah.
yeah. We'll leave a
Yeah.
link to their podcast in our
Yeah,
episode
I'd love
description, so you guys can also
to.
check it out. Yeah.
Yeah, perfect. So yeah, a lot of the operational things that I didn't expect as an investor. There's a lot of effort that you have to put into do marketing, and yeah, so it's really about building a company as well.
Seeing as how building a VC firm is almost like building your own like startup, so to speak. There's a lot more layers to it than just putting money in and waiting
Yeah.
for that money to grow. And as you mentioned earlier, there's a lot of talking to founders about not just their wins, but also the challenges that they have. And speaking of wins and challenges, to wrap up this interview, can you share a little bit of a make or break moment throughout your career? It doesn't have to be at Kadan, it could be in one of your previous lives that has shaped the way you work with founders today.
I think one of the things is before starting Kadan, I was at my family foundation, which I still run, and I launched the accelerator, basically like an accelerator program for women in politics, as I was quite passionate about the gender gap in Japan. In fact, Japan ranks 124 out of 148 countries when it comes to gender gap in politics, according to World Economic Forum. So there's a lot of improvements that could be done. So I started this accelerator, but in the beginning, when I was just starting, I probably talked to 100 people pitching this idea to get supports because it wasn't just the funding, but I needed advisors. I needed a whole ecosystem to support the program. And I think 90% of the time I got rejected. And that was the first time that you constantly get rejected, but you have to just keep going. And it's not just, yeah, it's a lot of, I think I really learned that persistence and how tough building something is from the scratch. So of course, as an investor, we have to say no to 99% of the founders that we meet. But I really think about how tough it is and have a huge respect for any founder that dares to challenge.
I think there's definitely a lot of those facing reality kind of moments
Yeah.
when starting anything, starting a startup, starting a fund, and really a lot of respect to you for actually going out and doing what you set out to do when you joined IVA. You guys have been running for more than a year now and have a lot of, as you mentioned, LinkedIn presence, doing a lot of podcasts and making investments. I guess the most important part of it. So yeah, thank you, Ray, for joining us on call. It's really great to catch up and really see how our alumni from the program have been going out and continue to giving back to the ecosystem and helping the ecosystem continue to mature. So yeah, thank you again, Ray, and hope to catch up with you again soon.
Yeah, thank you so much for having me.